Hi and welcome to another edition of Weekly Market Report by tradersclub.co.uk. This is a report covering week beginning 21st of January 2013. As per usual, let's start with our disclaimer. Anything that we discuss here, it's available in a public domain and therefore it should not be considered to be investment or a trading advice. We're simply sharing the information for the benefit of the club members. The first chart we can look at is the actual chart of Apple computers on daily time frame. This appears to be forming a topping or a bearish head and shoulder pattern with clearly defined neckline. The price action actually lost the support of that neckline and subsequently came back in, unsuccessfully trying to fill the gap from last week, and obviously it settled exactly on a neckline, which is a $500 price tag. This is very significant support. The loss of this support would be seen, probably could be seen as a quite bearish development. In that case, we could take the distance from the shoulder to the neckline and add it on loss, which could potentially target 400 level as a next point of resistance over the medium-term time frame. Some of the aggressive analysts are actually calling for top of the head to the neckline, which would be quite a significant drop for Apple computers. Price can definitely push higher as well, but there is a significant amount of resistance overhead in the shape of this previous gap. Also 20 period moving average at 517 level, falling resistance trend line and 50 period moving average at 537, and the most significantly 200 period moving average on daily at 591. So obviously price fell down, came back to retest 200 period moving average, rejected it and kind of came down as well. So this is something for us to keep an eye on. The loss of this support could potentially be seen as a bearish development for Apple computers. S&P 500 daily time frame, we made a higher high, finally breaking higher than 1474 high on, I believe, Thursday of last week. The price can clearly move higher. There is no overhead resistance until this a rising resistance trend line is reached at 1530, 1550 level. However, a 1500 is usually a round number, and markets tend to react to those as well. We are quite overextended in this current rally, as indicated by stochastics and MACD. Even RSI is moving to close to overbought level as well. Support on the downside should clearly be located around these levels, 1474, followed by 1470, all the way down to 1453 levels, which is a 20 period moving average. Alternatively, if the price wants to move higher, there's nothing there to stop it, and we can very quickly be sucked up to 1492, 1499, or as close to 1500 on a daily time frame. This is a chart of S&P on 1 hourly time frame. We can see a clearly formation of this rising wedging formation and upward move, creation of higher highs and higher lows. In this case, we're moving close to that 1490, 1492 resistance level that I was mentioning on a previous chart. Support on the downside, 1477, followed by 1472, which is 20 and 50 period moving average, followed by 1468, which is this previous high here as well. So those levels are the ones that I would be watching as a possible retracement. S&P on 15-minute time frame, yet again a a clear indication of a breakout above previous high. We came back to retest it again, confirmed the support in the shape of this rising trend line, and also this dotted blue line, which is the previous high at 1474.51 level, which is previous resistance that was challenging for us to take, and finally we went higher and came back to retest it. Now the price moved higher. It can clearly move higher as per my hourly and daily time frame. Alternatively, if we see a bit of a consolidation and the price pulls back, levels for me to watch as a levels of support would clearly be here at 1480 level, which is this rising trend line, also a cluster of 20 and 50 period moving averages on 15-minute time frame, all the way down to 1475 level, which is this dotted line as well. Volatility index, I've decided to put a weekly time frame on in this weekly market report, purely to indicate how low we actually went. The actual rally in S&P caused this kind of pullback on volatility index. Market is completely complacent. There's no risk priced in at all, and we actually lost that significant low of 1360, 1330 level and closed below. So this dotted blue line is a long-term falling support trend line on weekly time frame, and we can see that stochastics is actually moving very, very quickly into oversold on weekly. We could notice as well that every time we were on those levels on a weekly time frame, they usually preceded a bit of a spike or a rally in volatility index. So if these levels stay, the resistance on the upside could be close to 15 or 16.3 or 17.18 on weekly time frame. Alternatively, if you lose this level as a support level, S&P would probably be rallying at the same time. So we could see the spike to this 1530, 1550 levels in S&P. Copper carried on consolidation further within this long-term triangle, and the price actually pulled back, retested 50 period moving average on daily, indicated here with this blue arrow, and also found a support at this rising support trend line and subsequently bounced back higher. So resistance on the upside, 372, which is the horizontal resistance, followed by 375. The close, daily close above this level would be seen as potentially very bullish development, potentially targeting 383, 395 and 4 very, very quickly as a result of that. Alternatively, support on the downside 364 followed by 360 and 356. Gold, a continuous consolidation in this bullish flag, as it would appear to be, A, B, C, D, E. We are waiting for a breakout on E. The price spiked higher very quickly, retesting the previous high at 1695 and also 50 period moving average. And then we had this kind of rejection and a creation of this dodgy candle. At the same time, dollar index was rallying, so it's acceptable pullback. I would like to see this price move higher and retest this falling resistance trend line as close to 17 as possible. Only at the daily close above this 17 level and as close to 1720 would potentially be seen as a very bullish development for gold, and in that case we could target much higher prices, including 1755 and even 80 over the medium period. Support on the downside, it's clearly located here, as close to 20 period moving average and also 200 period moving average on the daily time frame. So we are talking about 1684, 1672 followed by 1666. It shouldn't go any lower than that. If it does, then obviously that could negate this bullish scenario. WTIC NYMEX oil finally broke higher above this falling resistance trend line and closed above that level. As a result of that, obvious resistances on the upside are located here at around 97.50 or 60, as indicated by this dotted red line, and obviously 142. There is nothing up there to stop us going higher. There is no moving averages, no other trend lines apart from these two horizontal resistances. Alternatively, on the way down, price should clearly be supported here by this falling trend line. This was previous resistance that was challenged on a number of occasions, and finally we broke higher. If we stay above this level, yes, these numbers are in play, and they're obvious resistances. Alternatively, if we subsequently go back inside and this proves to be a false breakout, then the levels to watch would be around 92.56 level, 93.66, 92.56, 91.21. All of these numbers are in play as well as support levels. Red flag is that stochastics, MACD, and RSI are clearly in overbought levels, so some kind of sideways consolidation or a pullback is quite acceptable. And finally, the chart of dollar index. This looks quite bearish, head and shoulder pattern. However, the recent price action appears to be respecting this support and confirming this support. The Friday candle appears to be a bullish engulfing candle, and as a result of this action in dollar, we saw a bit of a softening in other currencies and currency pairs, and some of the commodities, including gold, where gold price actually dropped a bit. A dollar index was actually quite firm around this 80 level, and yet again we are back to this 80 level, which is psychological level for us, and we retested it on a number of occasions. Support on the downside, it's clearly located here at 79.57, followed by 79.35, followed by 79. The loss of this a rising support trend line would confirm head and shoulder pattern only by the creation of the daily candle below these levels. So the daily candle closing below 79.35, 79.50, 15 would indicate that potentially this head and shoulder pattern is in play. In that case, we can take two levels, either the distance from the shoulder to the neckline on the loss, or possibly head to the neckline on the loss as a potential future target prices. Alternatively, if the price goes higher, the obvious resistances are clearly here, this falling resistance trend line at around 80.66 level, and also this horizontal and a cluster of these previous highs, followed by 80.86, which is 200 period moving average, before we attempt to go any higher. This is the last chart for today. Hopefully you enjoyed it. If you read our weekly market report, you will see the grid and the matrix indicating intraday support and resistances for other currency pairs as well, and that's in play for Monday only. So it's based on a Friday close or a spot price of those currency pairs. Stay in touch, stay safe, and hopefully I'll talk to you soon.